GDP growth in 2022-23 was 7.2%, contrary to market perception. Estimates for the fourth quarter increased by 6.1%, with value added increase by 6.5%. In 2022-23, core gross value added, which is an indicator of private sector health, grew by 7.7%. It appears that investments actively are reviving, which is driving the optimism in the economy. For the entire year, agriculture performed significantly better, registering a growth of 4%. Overall GDP growth has been driven by the recovery of services, which has grown at 9.5% over the last year. Trade, hotels, etc. were obvious performers considering data on high frequency indicators such as passenger air traffic, which have steadily improved in the financial year 2022-23. The credit growth of scheduled commercial banks remained strong at 15.5% as of May 5th. Sector-wise, credit is 2.8 times higher in April 2023 than last year. As capacity utilization has increased, the credit to GDP gap has narrowed, reflecting improved credit demand in the economy. Government investments in infrastructure has kept the construction sector quite upbeat. The sector's healthy order book, which is at around 7 trillion rupees for 9 players, reflects improved rural employment and medium-term revenue visibility for the infrastructure segment companies. 53% of new investments, which of course are announcements, were in basic chemicals and roadways in 2022-23, which may also fructify in terms of grounding such investments which were hitherto announcements. Manufacturing showed a modest growth of 1.3% over the past financial year. As a result, it has picked up pace in the fourth quarter, growing by 4.5%. However, the fourth quarter earnings of 3,774 companies reveal that corporate margins are improving steadily. There is a mixed picture when it comes to the expenditure side. Consumers were slowed by rural consumption and inflation in the beginning of the year, resulting in a 6.4% decline in final consumption in 2022-23. Growth in private consumption, the largest component, slowed to 7.5% in 2022-23, while government consumption increased by 0.1%. Among the explanations for lack of private demand is the lagged response of rural consumption to the opening up of the economy. Rural demand is still lagging urban demand in high frequency indicators. Diesel and two-wheeler sales have been gaining traction in recent months, while tractor and fertilizer sales have declined. In the fourth quarter, FMCG companies in the listed space reported a 14% increase in top line growth and 28% increase in bottom line growth. The lagging rural demand needs to be probed in the context of stellar agricultural growth. It appears that allied agricultural activities are acting as counter-cyclical buffers to farmers' incomes. Certain commodities are trading above minimum support price of ENAM, indicating better price discovery and income prospects. These data points should be considered along with the rural wages. Of course, there are some good global factors contributing to the positivity, which include the passing of bipartisan debt ceiling bill, which of course has to be approved by the Senate in order to avert default on USD 31.4 trillion. in debt. Of course, it's going to be a passing event. It's going to happen in any way. But for the bulls, there is a problem because bulls in the markets feel that the potential impact of deferring the federal debt limit for 2 years may allow the government to borrow freely to pay its bills. In such a case, as a result of the deal on the debt ceiling, investors are cautious about inflationary pressures in the US. Market participants are watching the trajectory of US interest rates as the US 10-year bond yield is poised to rise. Now, for the world, the passing of the bipartisan debt ceiling bill is, of course, a positive development. But considering the exclusivity of Indian economy at this point of time in terms of growth when compared to the other economies in the world, I will now discuss India's broader picture. As we have discussed earlier with the data, the Indian economy remains strong overall. Once consumption picks up, the rebalancing of demand from private consumption to investments will boost further the growth. It appears that private investment activity will remain very robust in 2023-24 and domestic monetary conditions will remain conducive to growth. In light of this, I believe that growth will exceed the RBI's estimate of 6.5%, and I expect the economy may grow beyond 6.7% easily. Furthermore, there are some additional factors that could be the game changers in the near future. In comparison, the number of MSME units registered under Udayam has reached 1.87 crores. This is a very important development. While the number of GST registrations stands at roughly 1.4 crore, the increase in the registration of MSMEs is quite notable because it indicates the extent of further formalization of the gap between the two. If these small businesses are brought into the formal system, there could be a credit boom. Of course, we face definitely some of the challenges and questions, but we must not be left with the pessimistic narratives surrounding India's growth. Irrespective of any number of pessimistic narratives, we have been growing and we have been proving that we are growing. And of course, given these trends, I feel that Indian economy is showing bright signals and we need to be a part of this growth path. Thank you very much for your patient hearing.